Hello and welcome to Edison TV. Today I'm joined by Greg Smith, Chief Executive Officer of IP Group. IP Group is really the father of IP commercialisation in the UK. The business was founded in 2001, really to take ideas from the company's partner universities and turn them into businesses, IP-based businesses, and to grow and nurture them and create value. Today, the business takes a much more thematic approach, really focused on life sciences, clean tech and deep tech, and it's really focused on making investments that have a real impact globally in the future. Greg, many thanks for joining us today. Can you just start by introducing the business and describing the focus of the business as it is today?
Of course, yeah. Thanks very much for having us. Very good to see you in person again after such a long time.
Yeah.
So IP Group, I think, for investors, offers a window on a better future, fundamentally, which is really quite interesting in the times that we find ourselves in today, and certainly our recent experience of the pandemic and geopolitical pressures has shown that there is a big need for scientific solutions to big world problems, and fundamentally that's what IP Group offers to shareholders. In a little bit more detail, what do we offer? Well, we've got a focus on particular thematic areas. Our view from having doing this for the last sort of 20 years or so, as you mentioned, is that it really is an activity that needs to be carried out by specialists, investing into life sciences, investing into clean tech, investing into deep tech requires deep domain expertise. So that's something that I have taken as I've taken over as CEO and tried to develop the business in that direction. And what do we offer to shareholders? I think the sort of probably one of the things I hear most from our shareholders is this access to truly differentiated deal flow. This is something which is not commonly done through a listed vehicle, so quite commonly it's difficult for people who invest through the public markets to get access to this kind of activity. But being able to invest your capital into something which creates genuine impact and genuine value over the long term in a sustainable way, we think is a really sort of exciting and value creating opportunity for the business.
Great, and you've recently moved into the Chief Exec role last year. Can you talk about your key priorities for the business in your first 2-3 years?
Yeah, so I mean, I'll say I moved to CEO having been CFO for 10 years, so I know the business incredibly well, and for me a lot of it is about building on the strengths of the business over the last 20 years and the things that we've done really well and trying to dial those up. So I've focused my energy on two main areas: performance and team. On the performance side, it's been around what are the things that we've learned over the last 20 years that we really want to lean into. So part of it has been this increased focus on sector expertise, going deeper into particular sectors, being better known in those ecosystems, and indeed where we have successful businesses, for example, in the fuel cell space, that's enabled us to create other businesses around those that leverage the experience that we've got and our knowledge of the markets and the co-investors who work with us. So in that case, a great example has been additional investments in companies like Bramble Energy, which came from the same academic institution as Ceres Power. So there's something around that sort of deepened thematic focus. And the second area is around focus on those companies. And I'm often asked, what's the next nanopore? And I point people in the direction of, look, there are three big thematic areas. But under those three big thematic areas, there are a handful of companies that we think have reached the stage of maturity where there's a real opportunity to accelerate their growth stories. And so increasingly you will hear us talk about these conviction companies and clearly setting out the milestones for those businesses, the capital that they require, and the journey to value creation and impact creation for IP Group shareholders. And then the third thing on the performance side has been the work that I did for the last couple of years as CFO has been all around capital allocation and how do we make sure that we are making the best use of the group's capital, balancing investment opportunities in the portfolio. You know, we are an investment business. We were created to find interesting commercialisation opportunities, to back them, to build them, and to get capital behind them. So fundamentally, we are an investment business, and the majority of our capital is used to invest and to grow companies and to generate capital returns. But in the recent past, as we've been successful with realisations, I've introduced an element of cash returns as well to the business, and so that has been around a small but growing dividend as a component of total shareholder return. And where we have realisations, we will allocate a proportion of all realisations to shareholder returns in that way. And if that's more than the dividend, then we'll use tools such as buybacks or tender offers, those sorts of things, to supplement the capital return. So that's the crux of the performance piece. It's taking what we've learned and it's really trying to accelerate that. And then on the team piece, it's around building a sustainable culture that is going to make IP Group a business that people are going to want to work at and is going to be highly successful for the next 10, 20, 50 years, hopefully. And so that's been focusing on the learning culture. It's been focusing on inclusion and diversity. So I lead the inclusion and diversity initiative within the group. And it's been around ensuring that we're all clearly articulating the role that each person plays in delivering the mission of IP Group.
Great, thank you. And one of the elements that really differentiates IP Group is your diverse international footprint. So you're in the UK, Australia, New Zealand, China, the US. Can you talk through how that works, and I guess how you mesh the domain expertise with the geographical profile of the business?
Yeah, no, that's a great question. It's really interesting. Like my fundamental view on this is that the commercialisation of science and of technology and of innovation really is a global activity. If you look at the research groups around the world who are collaborating, they're not tending to collaborate with people down the corridor, they're collaborating with people in other countries. And if you look at the companies that we have successfully created from the back of that research, companies like Oxford Nanopore, like Ceres Power, they are looking out from the UK to global markets. And I think the activities that we undertake, we have an edge because we operate in most of the countries in the world that have a focus on deep research and science and development of that for economic gain. So we're in the US, we're in the UK, we're in Australia. So that gives us some really unique insights into what's coming around the corner, what's happening in areas of innovation, but also crucially, what are the different market opportunities and needs. So a couple of examples to exemplify that. Our Australia business is one of the youngest parts of the business. Most of the assets are in are UK based. It's about sort of 90% of the assets are UK based, and we have small exposure in Australia, which is going really well. They doubled their assets last year from performance. But the opportunity sourcing is something where you really get to mesh the geographic and the sector base. So we started a new business last year, which came from the University of Wollongong. I don't think there are many businesses such as ours operating in Australia, let alone Wollongong. But this company has discovered a step change in the efficiency of hydrogen electrolyzers. And they published, with our help, a paper in Nature just a couple of months ago showing that the efficiency that's possible with this system goes from sort of 60 to 75%, which is the current market standard, to 95% plus. And that was something which came about as a result of A, our presence on the ground in Australia, but B, our deep sector focus in the clean tech area. And the clean tech team had been looking for the last 3 or 4 years for something which was fundamentally different enough and groundbreaking enough on the physical infrastructure side that could actually make a difference in the hydrogen space. So that's a great example on the sourcing side. From the capital point of view, that's another place. The markets are global, and having a presence in China, for example. So we have an office in Hong Kong. It's a small office. We have a couple of people there, but we've been running capital markets events for our portfolio companies for the past 4 or 5 years. It's been a bit stymied in the last couple of years, but prior to that, and that's led to a number of things. It's led to identification of co-investors, but it's also led to businesses that are in the portfolio being able to develop commercial partnerships. Ceres Power is a great example of that. One of their leading collaborators and JV partners is a massive Chinese company called Weichai Power, and part of that was brought about through relationships that we were helping them to foster in China. So fundamentally, the network internationally gives us that edge because it enables us to take what we do particularly well in different countries and in different sectors and apply it into the other different sectors. So I think it's a really, really important facet of our business, and gives real opportunity actually.
Okay, so full year 21 was a record year for IP Group. Not least the IPO of Oxford Nanopore. Can you just discuss the highlights of the year that's just gone by?
Yeah, absolutely. So yeah, as you say, 2021 was a record year. It was also the year in which the group celebrated its 20th anniversary. So it was quite fitting that we had that landmark year. It's quite difficult to find a highlight much better than the Oxford Nanopore story and IPO. It was a hugely successful IPO on the London markets, and I think fundamentally that's something that the group and the wider ecosystem can contribute to in driving the UK as an innovation economy and bringing together innovation and capital, two things that we do particularly well in the UK, and I think that's sort of vital for the role that we play as a country going forward. So that was particularly pleasing, and it was pleasing from a financial point of view, obviously, and we were able to, as the largest shareholder, we were able to take some cash off the table at the IPO, but we retained the largest holding, the largest shareholder still on the register, despite having taken 20% of our holding off the table. So it was really good from a financial point of view. But the thing we're really, really proud of from Oxford Nanopore is the impact that company creates. They were the first, and their technology was the sort of first responder, if you will, in China at the outbreak of COVID-19. I was just at their London Calling most recent conference, and that's the first one they've done in person for 3 years. And they've sequenced over 1 million COVID cases and identified strains. So it's really quite an amazing business that is having a true global impact, making real meaningful difference on the world. But also it's exemplifying the IP Group model, which is you can find these businesses that create incredible impact and they also create incredible value. And as a listed business, obviously the creating incredible value is sort of first and foremost. But I genuinely believe that in those areas of particular impact, there will be great opportunities to create value. So that was obviously the standout transaction. But I think what was quite interesting for me was it really demonstrated a further maturing of the portfolio, and there were a number of other exits. So it was almost an embarrassment of riches, really. So the Oxford Nanopore contribution was about 300 million, but there was about 200 million of profit from a number of other businesses. And to give you a couple of examples, in our deep tech portfolio, really exciting business called Wave Optics. They create waveguides for VR and AR applications, and that business was bought by Snap Inc., Nasdaq listed Snap Inc., and we believe that was one of the biggest tech-backed, VC-backed IPO exits in the history of Europe. So really interesting transaction, and hopefully that will enable that technology to really sort of accelerate and get into the markets. And then on the life sciences side, we sold a liquid biopsy business called Innovata to Nasdaq listed NeoGenomics, and that business again seems to be going very well in its new home, and we realised more than 50 million of cash from that transaction. And then finally there's another business, a cancer therapeutic, which is, it wasn't the most significant financial transaction. We did well from it, and we sold it to another US LASDAQ business called Athenex. But the thing that obviously isn't necessarily always picked up is the company's technology works with very, very difficult to treat childhood cancers. And the reason I think that the technology is so interesting is you saw almost complete remission from two pretty impossible to treat childhood cancers, and that is a really profound impact on the world. Again, combined with a financial return. So that's what you get through IP Group, is that sort of the combination of this financial return with an ability to actually create genuine impact on the world.
Fascinating stuff. 2022 looks to be a lot more difficult, both from an economic perspective and on the markets. You look well placed in terms of your balance sheet. I think you've got 322 million cash on the balance sheet. But can you talk about how well you feel the group is to progress in this year and next year?
Yeah, so I think the whole world has been plunged into a level of uncertainty that we haven't seen for a number of years. I joined IP Group in 2008 and presided over the financial crash and the impact that had on the capital markets and the impact that had on early stage investing. And so the current times are quite uncertain. So I think it's really crucial, as you pointed out, that shareholders are confident that we have a very strong financial position. The cash balances, as you say, more than 300 million gross coming into the year, put us in a really strong position and pretty vital. A number of times I've read analyst reports and views on the market that talk about cash as a strategic asset. Thank goodness we'd had the last couple of years that we've had, and we've planned for that success. But I guess my view is that although we have these shorter term headwinds, the macro environment for what we do over the medium to long term is really, they really are tailwinds. The belief and the recognition in the markets, particularly post-COVID, that big scientific solutions are needed to big problems in the world, is something that we have been basing our business around for the last 20 years. And I think it feels a bit like the world is starting to catch up with us in that space. So from, for example, in the clean tech space, there are, whichever research report you look at, there are trillions of dollars of investment that needs to be made in the energy system. And our companies are very well placed to benefit from that. So the sort of, the longer term macro trends, as well as, the trend towards ESG investing, the trends towards impact investing, all of those things play in our favour. I'd say in the sort of the shorter to medium term, there are a number of companies that we've set out in the annual report this year that have milestones coming up in the next 18 months or so, and they will be value creating milestones. Companies like Istesso, which is just entering into its phase 2B trial in rheumatoid arthritis. Huge market, huge potential, relatively lowly valued business that we own more than 50% of. So real opportunity there. And then fast growth companies in the cyber and AI space like Featurespace, which is sort of really in a fantastic position, and lots and lots of information on Featurespace on their website. So there are a number of these leading companies that we think can still progress. In the shorter term, it's a case of trying to adapt our short-term tactics, particularly the level of cash that we want to invest into the portfolio, to be mindful and to give us the flexibility to see out the current environment. So, longer-term prospects looks like a lot of tailwinds, and we're really excited about the portfolio. Shorter term, like everybody else, quite uncharted territory. So, play your tactics carefully and make every pound count. Absolutely.
But the business has actually created a number of unicorns over the years. There's obviously Oxford Nanopore, Ceres Power, Hinge Health. And then there's companies like First Light Fusion that look particularly exciting. But can you talk about how you actually go about valuing a business that's got a lot of IP and the potential for that is enormous, but is still essentially at the pre-revenue stage?
Yeah, that's a great question, and maybe you're cheating because I used to be the CFO, so you can look back on prior experience. That's normally the point at which I turn to Dave and say, "Would you like to explain our deep approach to valuation?" So, I mean, fundamentally, we try to value the portfolio on the sort of conservative side of balanced, and our auditors, KPMG, every year report on how we value the portfolio, and that's how they rate us on the conservative side of balanced. And what we try to do is look for external market inputs, and so the majority of the portfolio is either marked to bid if it's listed, like Oxford Nanopore, or it's marked to the last transaction, the price of the last transaction, provided it was relatively recent and provided there were sort of genuine new investors or different portions of investment. For a company like First Light, that's a great one, isn't it? So fortunately, there are 5 or 6 other peers out there in the market. So when First Light Fusion achieved their world first, I mean, it's quite incredible. This is the first time any company or institution or anyone anywhere in the world has created fusion using a projectile. So it's inertial confinement, squashing things down, but using a projectile to do that. And so this really is a world first. But there are a number of other businesses around the world, companies like Commonwealth Energy and Helion, who have also achieved fusion, but using different methods. So they might have used plasma, or they might have used laser techniques. And so there is an element of peer review that you can use to see, well, what did those businesses raise capital at? So you can triangulate an element of sort of peer valuations, and the work that we do internally, where it's particularly subjective, we then partner with a third-party valuation agency, in this case a business called Kroll, and they did a piece of work that looked at both a sort of a fundamental, what could the value of this business be if it achieves energy gain and ultimately becomes a viable business creating power, right through to what might peers and what would the market put on it. And clearly the most valuable and the most important piece of market data will be the value that the company next raises money at, and the plan for them. They've got UBS engaged, and the plan for them will be to raise money. In the meantime, we've increased the valuation sort of to the bottom end of the range, and hopefully over the next sort of 6-12 months, they'll be successful in raising the money to continue on their sort of technical and commercial journey. But it's really important to say, First Light is an incredible scientific endeavour at a real shoestring budget, really, compared to all of the other approaches to fusion. Tens of millions of pounds to get to a fusion event versus hundreds of millions. But it is also worth saying that the journey to fusion is going to be long.
Great, and given today's environment, a lot of people, I'm sure, will be very keen to see the pathway for that, and hopefully see accelerate one day. Greg, many thanks for joining us today.
Thank you very much for having me. Great to talk to you. Thank you.
Thank you for joining us. This is Edison TV.